I am privileged to moderate the panel, Crystal Ball, the Future of Broker Distribution. So, one of those trivial sorts of items. When Wendy approached me on this, I said, that's fine, but I really need some smart people that are going to help us with this. And she came up with some very smart people. So, I am going to start the introductions from this end, my left, your right. Bill Morris from Navicom, that you've already heard from this morning. We have Simon Rivard from Aviva Canada, Greg Purdy from Pathway Partners, and somebody you probably haven't seen before, Jeff Roy from Excalibur Insurance. We're going to start out just by setting the stage a little bit. I'd like to ask each of the panelists in turn to talk about two things. What are the top two trends that they see for the property casualty business in Canada over the next 3 to 5 years? And what are the implications of that? What's going to be the impact of these trends on the broker community? We've set it up, and each of the presenters has got a couple of slides. We'll talk about what a couple means after we're done. We'd like to start with Bill. So,
thanks, Patrick. Usually I'm the one that doesn't understand what a couple means, but today I'm going to try and stick more or less to it. This is a quote that got my attention a couple of months ago, and it's really, we talked all around it already this morning. Tara did a great job talking about just how the digital front end is changing everything. But the bottom line is, I can't stress this enough, that your customer expectations are changing almost at an exponential rate. And the point was also made that in many cases they're changing because of their experiences in other industries. So it's not necessarily what they're seeing in insurance that's causing them to change. So they expect more, they expect different, they expect, it doesn't matter who they're dealing with, to understand them, to have personal solutions, to be a step ahead of them. And it's about making lives easier. In the most part, for spending money, it's like, what's it doing for me? So today's reality, I'm just going to quickly go through this because I think most of you are pretty familiar with the fact that, again, we've been talking about how important mobile connectivity is. We keep seeing the lines go up exponentially about how the adoption rate is not a question of if, it's just when. You know, we're used to a real-time instant response world, and at any time it's not instant, it's a disappointment, and we'll typically go and try and find one that is, and we live in real time. That's just the world we've become used to. And when we have it everywhere else, we ask ourselves, in any particular situation, well, why can't I have that here? So increasingly, you all have to be saying, you know, your customers are asking that question, why can't I have 24/7 when it comes to insurance? And of course, it's the proactive, personalized customer experience that is at the root of all this. That's what we've become used to. In terms of some key trends, ease of use simplicity is, again, what it's all about. We're looking for that. Our lives are getting more complicated in many ways, in ways that we can't control. So we look at the things that we can control. And, you know, I even saw an interesting slide this morning that says, it's not just the youngsters and the millennials and the Y generation that expect things to be easier. Even us old folks, as we get older, are starting to look for ways to make our lives easier. So that's, you know, sort of goes without saying. Ease of use and simplicity is a trend that is not going to go away. And you have to keep looking at yourselves and saying, are we doing enough? And of course, Orbit is all about that. So I think the people in this room understand that. Mass personalization is just the idea of having the ability to create solutions specifically for a person. Lots of software is already helping to do that. I think what's really interesting and what's going to be really fascinating over the next few years is the Internet of Technology, Internet of Things is bringing all this data, huge explosion, we've heard about that, but how is that going to affect our customers? How is it going to affect the privacy, how it's being used to good and maybe questionable use? Those are questions you have to deal with. And last but not least is the whole concept of commoditization. No doubt that there is some of that already going on. It's happened in other jurisdictions already. So the product increasingly, in our view, will be the thin edge of the wedge. So your challenge is, what do we do to deliver value beyond that? And start thinking about new ways of delivering relevant value in the 21st century. So that's my 3 trends for now.
If you could hand that off to Greg.
So I'm going to talk about data and how data is changing not only the insurance industry, but the world at large. Brokers today work with a really small subset of data, their own view of their clients, their transactional data, the historical transactional data. And it really gives you a fairly narrow perspective on who your clients are, what their needs are, how to service them 24/7, 365, and all of that sort of fun stuff. You know, if we're looking over the horizon at where the world is going, data is becoming far more available and is being searched in ways that it has never been searched before. So what was just a few years ago out of the reach of, you know, small companies to do is now really achievable. And put that in perspective, there are companies that, you know, have $10 to $15 million in revenue that are engaged right now in basically downloading the web. Sounds like a crazy thing, but they're basically going through and pulling all of the data that you can grab off of the web and searching through that to find the correlations and the relationships, how you can use that data to relate it back to underwriting, service. So one of the fascinating things that I've learned just a couple of weeks ago is that if you start looking at sites that do reviews on client service for businesses, there's actually a really high correlation between sites that have negative views and an increasing number of negative views. There's a high likelihood that that business will have a claim somewhere down the road. So, you know, traditionally when we looked at risk, we didn't look at those sorts of things. We looked at historical information and we looked at sort of the tangible facts of how a risk has changed over time. But you can now look at variables that didn't exist 5 years ago and incorporate them into your rating, underwriting, and client servicing behaviors. So that's a trend that is going to explode. We're working with companies right now in bringing that sort of data into their perspective on how they view their clients. And you'll see that that gets rolled out over the next 3 or 4 years and increasingly more available and attainable for brokers. One of the trends that will have to change is that brokers have been fairly flat in their investment in technology over time. And you're going to have to spend a little bit more and invest a little bit more in the changing dynamics that are occurring in the world. And this is also true for the providers of broker technology. They've invested a lot of money in developing solutions to date, but they'll have to start changing and evolving that technology for how to compete in the world moving forward. Companies that are selling direct to the consumer have an advantage that they can streamline the process in how they implement big data solutions. In the broker channel, there's a disconnect between the suppliers and the brokers at the front end servicing the consumer. And I was at a conference a year ago and we talked about this, we did a debate, and we had to decide what the barriers were for streamlining that process. And one of the things that we concluded was that probably at the top of the list is a trust issue. It's not actually a technology issue, it's a trust issue between the brokers and the carriers about which data can be shared, who owns the data, and how you put that into operation. You know, my own perspective on big data and data solutions is the argument over who owns the data is irrelevant. The data is available and accessible, and it has to be used. So, you know, for some people that's a heretical, can't say the word. It's a big problem for them. That's right.
And God knows about it.
God knows about it. So the sooner you get to that point in time, I think it makes the process moving forward a little bit easier. The next part of actually taking all of that data is how you actually implement it into something usable. And there are basically three ways that profiling and segmentation has been done and is being done today. There's the traditional approach where you're just looking at the basic demographics around people. And then we're adding in layers that are basically looking at behavior and lifestyle. So when you begin factoring in behavioral types of metrics, it's how they like to purchase the product, when do they want the product, how they like to be served when they have a requirement. That's behavior. Lifestyle is where they're at. Are they, a young family adding things to their household? Are they older, their kids are moving off to university? Your requirements as a consumer change as you move through your lifestyle. And if you use data effectively, you can enhance the consumer phase very nicely by being ready for the next thing that they need, as opposed to looking at what the last thing was that you offered to them. So those are sort of the high-level trends that, from our perspective, that we're engaged in. So I will pass it off to Simon.
Okay, thank you, Simon.
So I've been told it was one slide. But after building TDinsurance.com in the early 2000s and crafting the same e-commerce program for Desjardins Insurance, I've led the insurance business for 7 years. And I came back 2 years ago to join Aviva. The first thing that struck me is the industry didn't really progress in those 5 years. It was pretty much what it is. But it's about to change. So when Patrick asks the question, if you have a crystal ball, I wish I would have that. But what's really important, how it will change, what's the impact on the broker side? I just pulled 2 sets of data for a provocation today. The first one is the under 35 are buying direct. Might not be a surprise, but for me it's a major concern. The reality is, we do have right now 83% of first-time buyer that will buy their policy via a direct insurance company. They're not going to the broker. So it means that the pipeline of new customers are looking elsewhere. Part is tied up with the reputation. New immigrants is another piece of it. There's multiple components to this, but it's something we really need to think about. The broker insurance company has always been relevant to the customer. How will remain relevant in 5 years and 10 years from now? So, first question. And just to add to this, more than 95% of the under 24 are buying their first policy directly. Somewhat linked to this is customers are telling us, and that's proprietary data, it's a survey that we've done a couple of weeks ago. We're testing the appetite for the Canadian customer to buy directly online. It doesn't say directly from us, it would be directly with the brokers or to bank assurance or whomever. And I was shocked with the results. I was not expecting that. I would expect that to be more in the 30% range. To see that 80% of the U35 are ready to buy online, for me the question now is, what do we do on the broker side? The new customers are still willing to buy from us, still need advice, they're willing to move and buy online. I'm not seeing a lot of broker so far that bring in the market the right solution. I can count on my hand the numbers of brokers in the country. A couple in Alberta, some in Ontario, 1 or 2 in Quebec that did fully embrace digital. And I think, if we don't tackle and address those questions, we're putting ourselves at risk in the near future. Saying this, that was my only slide.
Thank you very much, Simon. And last but certainly not least, Jeff has got a couple of slides as well.
Just a couple. You got 5 minutes.
And you got 5 minutes, and you know that. So is this working?
We got told a long time ago that we just have a couple extra steps when we had portals, so I didn't quite understand the question there very well when they said a couple slides. I thought this was a good one to take a look at it. You can kind of see how easy Apple's mobile app is, how easy Google is, and then there's your insurance company app. Do we have a user problem there or what? I think that's part of the problem with what Aviva's commenting with Simon, that we're not getting the youth. Well, we don't have the tools to get the youth. We got to work on that. The two biggest challenges in the next 5 years. Now this is tough for a guy like me, because I could have probably came up with 35 answers. I had to narrow it down, and I came up with 2 topics. Digital Darwinism. The brokers have to have the ability to adapt to changing technologies and social trends and provide a world-class digital experience. And the second point is artificial intelligence. And I know a lot of people here will really debate that, but I had to bring up something controversial. So, digital Darwinism. Darwin's come up with a few good things, and I'll touch on them twice. The evolution of consumer behavior, basically what it means in a nutshell is technology is moving faster than our ability to keep up. And that's creating a lot of havoc in brokerages and insurance companies. You know, consumers are getting all these new shiny objects. Brokers are losing their mind trying to keep up with them. It's creating a real dynamic right now. And I think the first thing brokers need to realize, we're not just in the insurance business, we're not in the marketing business, we're in the experience business. So as soon as we define what we're in, it's going to help change our mindset. We have too much limited thinking. I call it buggy whip thinking. You know how popular buggy whips are right now in Dubai. That market kind of dried up. So we need to make sure we're in the right business. And that's a huge shift we have to make. The experience business, we have to look at the customer experience. And a quick definition is the cumulative impact of touch points over time where it creates a real relationship or lack of it. So basically we have to, every touch point, we got to show up and wow our clients. And if you look in the insurance industry right now, I would question if we're wowing them. I think we're underwhelming them in a lot of cases. We must reduce customer friction. The first call resolution, when somebody calls you, you need to deal with it immediately. It's not acceptable. I'll call you back in 24 hours. I'll text you next week. That doesn't fly anymore. So if you respond quickly and deal with them, your satisfaction goes up, which means more referrals. The omni-channel is important as part of the experience. We have to be where the client is, and the client wants to start one way and finish one way. How many clients start a website trying to do a quote, and oh, by the way, we can't bind because their solution is crap, and we have to finish it off on the phone because the broker feels better. That's a huge issue, and that's why we're not connecting with that demographic, and we have to fix it. There's just the phases of communication, and if you look at phase 1, I think a lot of brokers are still on the telephone, fax, postal, mail. Some of them moved up to email, instant messaging, but the social media, the online, the Twitter, the phase 3, we need to get into phase 3. And we need to understand phase 3 to jump into phase 4 with the wearables, the interactive devices. So that's the journey. A lot of people, a funny stat, 18% of brokers in Canada do not have a website. It's very scary. It's really hard for somebody to find you to get a quote if you don't exist online. So one of the things you have to ask yourself as a broker, my job here is to really stretch your mind, make you feel a little bit of pain, and get you thinking about this, is Buckmaster Fuller, he says you never change things by fighting them in existing reality. Sometimes you have to build a brand new model and make the old one obsolete. So we have to ask ourselves, are we going to be able to build a new model, or do we have to? Are we going to continue to put lipstick on a pig and on our current experience and add little pieces in there to make it look good? These are things we're going to have to examine and push ourselves to do. Consumers shop different, and that's one point. If you don't have a website, there's the 3 stages, and Greg can explain this a lot better, but you have the thinking stage when people are looking for you, way upstream. How many brokers pop up in somebody's display ad on the internet when somebody's looking for a new car? I would say 90% don't pop up. When somebody's researching a little more detail, do you pop up in their world? And when they go to purchase it, are you there? Are you on the second page of Google where they hide all the dead bodies? Are you showing up on the main page? These are things you have to ask yourself. Everything's going mobile. 45% of Canadians expect companies to have a mobile app. Show of hands, how many people have a mobile app in here? Put your hands up. Okay, how many people have a really kick-ass mobile app that you're excited to show people? Okay, one person, good, excellent. So that's a challenge, right? We need to have some stickiness and gamification of mobile app. I found this very interesting to see the adoption of technology with mobile-enabled websites. That's across Canada. So 44% of people in Ontario, when the survey was done, brokers had a mobile responsive website. It's pretty tough when most people are searching on their smartphone trying to find you when your site doesn't work. People last about 4 seconds, they're on to the next thing. So currently 36% of searches are done by mobile. They expect a 12% increase. So 50%. So if somebody's searching for your brokerage and you're not mobile enabled, how the heck are they going to find you? So these are some basic stuff, the technology opportunities we have to deal with, self-driving cars, big data, the connected home, wearables. These are all things that we have to adapt to over the next period of time as brokers. And the biggest thing I want to point out is we have to change our culture. We're getting in our own way. Too many brokerage owners, myself included, need to create a culture of innovation. And we're not doing that. And we need to change and shift how we think, how we lead our organization. And that's going to be the difference. It's all about culture. And we have to innovate. You know, we have to learn. We have to collaborate with others. And I like the term CANI, constant, never-ending improvement. There is no finish line. We got to get better every day because our competitors are ready to eat our lunch. And there's a line of disruptors ready to take us down. And we have to experiment. So I think I bring Charles Darwin back. The guy's pretty smart. He should have been an insurance broker. But it's not the strongest of the species that survived, nor the most intelligent, but the one most responsive to change. And a lot of people get this screwed up because they think, oh, the strongest are going to kick ass. There's a lot of big brokerages and organizations in every industry that's big. Big doesn't mean you're better. Big sometimes means you can't dance. And they always give the analogy with IBM. Teaching an elephant to dance is very tough. So we have to make sure that we're nimble and we're adapting. And there's different stages of innovation, but you have to understand, you have to know it, you have to create, and then you actually have to start doing it. And I always talk about fail, which sometimes people call first attempt in learning. Fail early, fail fast, fail forward. All the great people in history have failed. For some reason, it's not acceptable to brokers. I don't know why. Like, I guess we all think we know it all, and we're too scared to fail. We got to look at ourselves and take risk. And it's funny because we're in the business of protecting risk, but ironically, we don't want to take any. Brokers need to create a learning lab. You know, run experiments, test. You know, create a culture where it's okay to fail. You know, we keep doing the same things every day, going, oh, gee, the Yellow Pages, it's not working very well anymore. I just keep renewing my contract. Like, we have to change. That's the definition of insanity, doing the same thing over and over again. So, again, back to culture, learn from our failures, get better. And I like the best line, launch, fail, learn, fix. I can't tell you how many things I've failed out over the last couple of years, and I'm always amazed by my failures, but I learn from it, and I pick myself up and get to a better place. And everybody likes the term ABC, always be closing. I like ABT, always be testing. You got to be testing. That's for me. Innovate and
you've got exactly a minute and a half.
Perfect, I'm around schedule. So innovate and move to a good scale. So basically there's some points where you have to innovate versus scalability. I think this is the most important graph to look at. Brokers are not spending enough time in the 30%, the experimental zone. It's in that 30% zone where you try things and you try and bring things into your core. Most brokers are doing the same things over and over again, and they're scared to spend any budget because we might not get a return on investment, we might not learn, there's a lot of excuses. We need to start testing that. So, and again, collaboration, a rising tide floats all boat, we need to work together. And I thought Yoda, yesterday was May the 4th. No, try not. I can't do the Yoda very well. Do or not do, there is no try. So as a broker, you have to actually do it and try it. Don't talk about it, take some risks, do it. Last point, artificial intelligence, my second point. We're asking the wrong questions. How does this technology advance or help my business? The correct questions should be, how does this advance undermine our business model and require us, enable us to build a new one? And Seth Godin said it great, so we need to be asking ourselves that. And I talk about robo-advisors, and everybody go, oh, robo-advisors, that's 5 years off. You know, I don't even like talking to Siri. Siri doesn't talk back to me nicely. All these other things that are head trash. Robo-advisors are not that far away. And I look at it as not us versus them, it's us and them. You know, a robo-advisor working in your brokerage can do amazing things. You know, they can allow you to service a whole bunch of clients. Can your CSR handle 10 people, 20 people at once? A robo-advisor can. Can they provide unlimited customers at the same time? Or sorry, can they provide service 168 hours a week? Yes, your CSR is 40 hours. And basically, you have electronic recording of it. So there's a lot of really good things. And with the artificial intelligence that I see as a huge opportunity. And right now they have software that's called guided conversational first step that does a bunch of if-then statements. That's going to be the first step. We'll be able to take protection review, frequently asked questions, build it into that. And I've actually been presented with a test where I could actually run it this year to build this myself. And I'm tempted because if I can get this right and get the foundation, I can lay the foundation for the next steps. There's an example of some guided questions. You answer them, and instead of just giving you information, it'll actually provide you advice. So I think the last thing I want to point out with my last 10 seconds, I think, we need to work together with brokers, companies, and vendors. And we've all talked about it. There's a lot of synergies if we talk the same language. I found it very ironic. If you look at the marketing matrix, You have the media, you have the message, you have the mechanism, and that provides the client experience and marketing. But then on the software side, you have the user interface, the data, and the code that provides the user experience, and they're equal. If we can get talking on the same page and get these consistent, wow, amazing what we can do.
Thank you very much, Jeff.
Can I get through 36?
Broke the land speed record for PowerPoint there. I'm a little worried about that. Before we actually move on to that, there's been a lot of stuff about trends that have been put forward. Let me ask you, are there trends that you are seeing that we haven't not talked about? It's, am I the one with the microphone handing him up? Do we know how to turn it on? Oh, the on button.
Patrick, you know, am I? Okay. I'd like to talk about not a trend, but actually a very old problem that it surprises me that, Simone, you didn't recognize this. And I'm going to lay this at the feet of our insurance companies. I'm a broker. I can only sell what my insurance companies offer. And to be surprised that 95% of first-time insurance buyers now are purchasing through the direct channel is totally failing to look at your own pricing model. As a broker, when my client calls me up and says, my son bought I bought my son a car, what is the premium? Well, with a multi-vehicle, multi-policy discount, that price comes out anywhere from $5,000 to $12,000. They go to Bel Air Direct, and they get $3,500. It doesn't matter that they're doing it online, that's what they do anyway. But it doesn't matter what digital experience I provide that 18-year-old. They are not going to buy from me when I am that much more expensive. We only in the last 9 months have one of our companies that has a new pricing algorithm that is now competitive with the directs for these first-time buyers. And
So-
our insurance companies completely have missed the boat on this important issue. Because if you start out in the direct, the chances are you're very likely to stay in the direct. The other thing that happens is the 18-year-old goes to his parents and says, your old fuddy-duddy wants $6,000 from me, I can get it from 35 for $3,500. Why don't you switch as well? So it's a problem that we're not discussing, and I agree 100% with all the digital issues that you've discussed, and we're working on those as well. But until you fix this underlying problem in the majority of the industry, we are going to continue to lose these first-time, second-time buyers.
So the issue here is that there's legacy carryover in the algorithms that are currently being used, but not necessarily applicable in the direct channel. Is that
Correct.
Is that a fair statement?
Yeah, the direct.
Now, I'm not going to put that to Simon as Aviva unless you'd like to talk to that. But are there, to the panel generally, and Simon, you can talk, I'm not trying to stick a sock in your mouth, but are there, is that something that's prevalent within the industry, that there's different levels because of old things that we were doing? And if so, are there methodologies, are there ways to bring everything forward at the same time? Who'd like to address them?
And thanks for bringing that point. And when I presented the data earlier, I said it's a collective issue that we're facing. Every day at Aviva, I mean, with my colleagues and or actuaries, we're looking at this problem. It's my my provocation internally since I've joined Aviva to say, what are we doing for this crowd? So we are looking at it. There's no silver bullet to address this. I mean, there are some costs, there are some profitability associated with segment of the population, but we're looking into it, and it's needed to be addressed. That would be my my point on this, and I think, it's true for Aviva, but it's true for our competitors as well. So it's a general concern, and I'm with you. I mean, if the people that are buying their first insurance from direct, well, they might stick with direct. They might never look at the brokers in the future. And for me, that's you can either see that as a potential threat or an opportunity. I prefer to look at it from an opportunity standpoint and work together to see how we can tackle this challenge.
Are there any other thoughts? Okay, so in the back there,
Yeah, I'm not sure,
this will be the last one.
the implication on the regulatory environment. So it's interesting that we had a comment regarding price and how, the algorithms regarding pricing aren't necessarily fair between the direct writers and what insurance brokers might have available to them. But in reality, if it wasn't for a rather onerous application form for auto insurance, there'd be zero need for the broker to help fill anything out. I think you might want to be in a position where at some point in time in the not too distant future, there'll be one single piece of information that's going to be required for an auto insurance quote. And that might be just the VIN number on the car. With telematics, you know where that car's been, where it's housed, what the driving behavior is going to be. It's all there. It's being uploaded every minute of every day. Anybody with a car after 2012, almost every single car. So ultimately, you scan your VIN number into your PDA, and you've got an auto quote. The carrier, doesn't care who actually drives the car. They just know the behavior characteristics of how that car is driven, where it's housed, where it is, how fast it's going, whether or not you're braking too quickly or turning too fast or whatever. So it's less about price and rather about what's the role for the broker? Where's the value proposition for the broker in a very quickly moving world where there's data points that we haven't even that haven't quite even hit us in the middle of the forehead yet.
I think.
Secondly, the other point that I suppose might be of interest is in terms of demographics and the propensity of certain of us and certain perhaps younger demographics to use data and PDA in terms of buying things and one's comfortableness with sharing private information and so on is going to be a younger subset than an older subset of people. And as we know, the insurance business, particularly the auto insurance business, we don't have too much that we want to sell people who are under 25 years of age. Nobody's looking for vehicle drivers that are under 25. Those are the people that are actually most propensity to buy online. And in the absence, now that'll change over time because those people will become older and they will be used to using their PDAs and have a higher elasticity around sharing personal information. But it's kind of an intersection of who's happy with doing that and what we actually have to sell them. What insurance carrier wants a lineup of people buying auto insurance if you're under 25 years old? It's going to be a pretty thin universe of.
Can I comment?
Sure.
So, if I could maybe just ask Greg, I shared a little bit of information earlier, some of which is proprietary. I'm not asking you to necessarily dive too deep into the proprietary, but could you comment on the latter question?
I'll try. If you look across every demographic right now, they're choosing the direct channel. And it's surprising, if you look at people over 65, it's about 78% of them last month were choosing the direct channel over the broker channel. But within that, if you look across the histogram, there are opportunities there that are kind of sticking out where the broker does have an opportunity to demonstrate the value proposition, because I do think Neil is hitting the mark. It's really talking about the value proposition for the broker and how that changes and evolves over time. So first, the first-time buyer, if you look at the people that are married 30 to 35 years old, they are actually choosing the broker channel at a higher rate than some of the other demographics. So there's a spot right now for brokers to be appealing to that cohort. But you have to have the data to know that exists right now. It won't exist forever. It exists right now. And then lastly, if you use data a lot, it actually will reduce the opportunity for the broker to demonstrate the value proposition in today's world. So the auto application today is very complicated. It's been statistically proven that you can actually underwrite an auto app and you get the exact same loss performance by asking 5 questions. So if there's only 5 questions that the consumer has to respond to, you have to, where's the broker's opportunity to demonstrate the value proposition? There probably is one, but it has to be demonstrated and the consumer has to be understanding of that. You know, I buy an iPhone and I pay a lot more for an iPhone than I could. I'm paying a premium. So people do buy products that there is a premium related to it, but they understand the value proposition. And I think that as we move forward over time, it's understanding how you demonstrate that back to the consumer that becomes really critical.
Good points. I just had a couple points here. You have to look at your locus of control. What's in your realm? What can you control? I'll give you the analogy. If you're a scalper and you're trying to sell Blue Jay tickets and you're sitting down in Windsor on a non-game night, how many tickets are you going to sell versus being at the Blue Jay game night when people are walking by? One of the issues we have with the teen drivers and young drivers is we're invisible. You go to the website, I see Bel Air Direct, who spends $60,000 to $70,000 a month on pay-per-click, and maybe all the brokers combined wouldn't even spend that. They spent money on a brand where they communicate a value proposition that looks different. It's a little Nike that looks different. I'm not saying it's awesome, but you recognize the brand because they've been beating you upside the head with it for 3 or 4 years now. What are brokers doing on that? So that's in our control. So we can't, it's not just about rate. I do agree the rate needs to be within 5-10% for us. The companies have a lot of work to do and they're getting better and they need to work on that. I totally agree on that. In terms of the rating question, there's a company called Insurance-Fi in the US. MIT grads have built it, and they can take a picture of your license plate and give you a rate that's 95% accurate. And they're coming to market this year. So I think, you know, we need better tools here to do a rate faster. It's not just about speed of rate though, or doing a rate quickly. It's about adding value. You know, consumers have, I call it naked insurance, but basically they do it and they do it themselves and they don't pick the right coverage. That's where we add value. With all these changes, everybody's complaining, oh, I got to talk to my consumer again. If we didn't have these changes, we've got a great opportunity to show our value, and we have to show by how we explain it to consumers, not just by phone calls, by videos, by e-blasts, by blogs. We have a chance to differentiate ourselves. And most brokers, you know, aren't treating themselves as a media company and doing that, and that's where the problem is. And we have to take that on ourselves and step it up.
So that's, we're going to move on just a little bit, but not too terribly far, and talk about the consumer in a little bit more detail. The new consumers, the connected consumers, are making new assumptions and new demands, raising expectations based upon, as Bill said a little bit earlier, not just other insurance providers, but other people who are providing services to them. So I'd like to maybe start with Bill. What are some of the mandates that brokers should have in terms of responding to consumers?
Okay, well, there's just so much you can say on this subject, but just to sort of try and tie in what we've already been talking about, the value proposition that you're currently providing is sort of how you have to start the conversation. Customers will evaluate you based on what they've already had. And so you have to look backwards at that and say, so what's their experience been? And as you've heard me say before, I mean, the good news is the experience is getting better. The bad news is, for the most part, it's still pretty underwhelming. It's not bad, it's just there's nothing about it that stands out as being super different or super exciting in the absence of a positive claims experience, which you mostly give. So one of the challenges is how do you find new ways to deliver value, which it really means you have to step right outside the whole traditional experience of, you know, helping them get a policy and providing, you know, the basic policy advice and choice. And, you know, that's not for today, other than say, think innovation, think different, think about things that nobody's doing, and that has to be the whole new, brave new world of new and different value propositions. The other thing, though, that I think is interesting, and I just saw a study a couple of days ago by Capgemini, which is one of the big, sort of worldwide consulting firms. And we've been saying, all of our research says, hey, customers want more connectivity with their brokers. Now, it stands to reason that connectivity needs to be relevant. They don't want you to reach out and say, hey, do you want to buy more insurance today? I mean, if they need it, fair enough. So what's relevant to one person will not be so to another. So connectivity is important on relevant things, things that are important to them. This is a sort of mass personalization. The days of one-size-fits-all newsletters, I mean, they have to go, because all you're doing is reinforcing in the mind of the customers that I'm like everybody else. If I have a boat or a cottage, talk to me about my boat or my cottage. If I own a motorcycle, I want to know that you know I own one. The other thing that was really interesting to study with the Capgemini is so connectivity is important. We know customers want more of it. My point is it needs to be relevant connections. They did a study with the millennials, the youngest ones, and guess what? The insurance providers, and they're really not just saying it doesn't matter who, are increasing. So the connectivity, they're 3 times more likely to be connected with their insurance provider than typically than the other segments, the older segments, let's say. Oh, great, okay, so that's happening. What's surprising is what Capgemini found is that they were about 3 times less likely to be satisfied with that interaction. So, classic case of expectations outreaching, what's being delivered. And so just connecting isn't good enough anymore. You have to connect, and one can presume from that the younger folks are saying, okay, I know where to find my guy. If it's direct, it can be 24/7, somebody always answers the phone. But if they're not giving me the answer that I want, or the way that I want it, or there's something in the interaction that's not to my liking, then it actually makes things worse than not at all. So, interesting trend there for you guys to start to think about. As much as we hear more and more direct, they're out there, they're connecting, but they may not be delivering. And in fact, there's some evidence that they aren't. So, that's another point to sort of what Greg was saying. That could be a really interesting leverage point for you guys that says there's a bunch of millennials out there that are buying their insurance, but what they're getting from those folks may not be what they're expecting. And so, big opportunity for you guys to potentially understand that and jump in. And of course, a plug for having your own customer metrics. That gives you some indication about how you're doing.
So Simon, I'd like to maybe just turn to you for a second and talk about the insurance product and the role of the broker in it. It seems that there are new opportunities with new products coming forward to handle risks in the sharing society or the sharing economy. I'm thinking in your case in Canada, coming out with the just underwriting the Uber cars. Recently, Intact announced that they were taking on coverage for Turo, which is personal rental of vehicles. Airbnb is other things that are out there. What are some of the things that you're doing to prepare for this, and what do you expect your brokers to be able to do along those same lines? If you could comment on that.
Sure, great question. First of all, so I studied lately, we're expecting in U.S. the share economy to represent, right now it's in the range of 4 or 5% of the economy. We're expecting that to be in the range of 50%. So 2025 is not that far ahead from today. What does it mean? Uber and Airbnb is a great example. I'm going to give you just a simple one. I moved to Toronto a year ago, decided to build an apartment in my house for Airbnb, and couldn't get coverage at Aviva, right? Quite embarrassing. And as a customer, I was left out with any option. So there are absolutely new products that are needed for the share economy. And I'm sure my competitors are working on that, as Intact and the other, Economical in the Room and others, and we are. So we need to cover the gap. So that's going to be, a new product that will emerge. The one that we've launched lately for Uber was needed. The position we've took was to support Uber for drivers who do 20 hours less per week of Uber service. So really as a way to generate extra money wherever it's legally possible now. In Toronto it is. So that game is changing. I mean, we're just seeing the tips of the iceberg of the new product that need to be created to serve the customer needs. And it's really what matters. Customers are shopping differently. And maybe one last example is, we used to have a big trend where people were doing their university degree in the big city, moved to the suburbs. Now we're seeing like the reverse of the tide. Young couples are going back in the city. It's true in Toronto, it's true in Ottawa and Montreal. I mean, basically every large city in Canada. And what does it mean? They don't own a car anymore. They will rent one. So this is why, new products are needed. They don't need the same type of coverage. So as a carrier, we are working on this, and it will change as well the way we need to distribute it. What about it just on demand? In UK, you can have on-demand insurance. So you just need to insure the car that you're renting for 2-3 hours. It's a different reality. So I mean, product will change a lot, and I'm not talking about a driver-less car.
So let me ask you, Jeff, what should brokers start to do with we have a lot of things that are coming forward, there are going to be more. What are some of the types of things that you as a broker would do and you could suggest to the others?
Excellent question. For instance, let's take flood insurance. Aviva came out with flood insurance, was leading the industry, first one to come out with it. We could have just done nothing, mailed a letter out when the renewal came out and waited 365 days for our clients to get notice. But in the new world, our clients are connected, they're aware, and we want to educate them. So we have to, as soon as we get information, it has to go into a blog, it has to go into all our social media feeds to make sure that our clients and non-clients, our followers, are getting informed. If it's worth it, we should be turning that into a video, because a lot of people consume things on video. That not only helps your organic SEO, but more importantly, it educates people and helps them out. So those are things that as soon as things come out, you have to figure out how do we communicate this to our clients. In flood, we had an interesting case because we had flood with Aviva, but we didn't have it for all our other companies. So we decided to notify every single client that had a homeowner's policy, and we did it by mail, that we had flood available. Because what's our duty, right? If one of our clients had a flood claim midterm, we were in different legal waters, at least we reached out to everybody. So that's an example of coverage evolving, how we adapted, and again, if we had everybody's email, where it's going to go is we're hopefully going to be able to do that by email a lot better. We do a lot of e-blasts monthly. Our flood did go into our newsletter to all our clients and did go into our e-blast. So we got the message out quickly. Uber, same thing. We did a blog up immediately. We actually did a series of 3 blogs to educate people. We got the word out. We sent it out to our clients, and our clients see that you're innovative. You're actually coming out with new products. They're going, wow, these guys aren't a stodgy old insurance company. They're staying current. I got a lot of positive comments. Hey, you guys got Uber. That's cool. Even though Uber isn't in Clinton, but we are writing clients outside our area. I was able to use digital means to get roughly 15 to 20 Uber leads a week because we wanted to investigate the market, and we wrote a couple of policies. Our big issue was we had a lot of taxi drivers that drove a little bit more than 20 hours. And we ran into a problem because we actually could market and bring these people in, which is awesome. Our team was pumped, but then we couldn't write them. So there was a little miscommunication there. We're looking for a market. If anybody here knows a market that'll write somebody at a good price that's full-time, let me know after the talk outside. But that's an example of that. Now, as everything else comes out, though, I just want to point out, you need a system, and you can't wait 8 months to it. We have Wawanesa floods, the latest thing we have to deal with. We have to contact 300 clients midterm because they won't read it in. I'm hoping they'll reverse their decision because it really makes it very difficult for us to contact everybody, and it's putting us in a bad position, and it's kind of going against the industry. But that's a decision they chose to make. It's got repercussions to us, but we have to deal with it. I can't complain. We have letters ready to go out with prices to every one of our clients. We just have to decide if we can have time to follow up with a phone call. So
we're running well behind schedule on this, but I would like to, before I open it up to some general discussion, I know there are questions out there. I'd like to talk a little bit about data being the blood flow of the new economy and a few other things. And I'd just like to ask, maybe starting with Greg, what are some of the new things that our data are being used for and could be used in a broker's office? And then how does that relate to the current capture of data within their office?
Well, just to reach back, behavioral understanding of your consumers is really important. So we're spending an awful lot of time working with carriers at the moment on providing them with segmentation and profiling of their client base. So we go through their entire book of business and we tell them who's a hockey dad, who's a soccer mom, who's an executive on the move, what their buying tendencies are, what their preferences are, what digital media they're looking at, what brands are important to them. So they have the opportunity to have a very informed understanding of who their clients are. This is very different from what brokers typically have had both the time and the software to do. It's much more than just knowing somebody's birth date to know, where they are in their life and what their choices are. That data is very much available, and it needs to be integrated into the sales process. So if somebody's calling in and they pop up that it's an executive on the move, and they have a boat, that you're offering the right product. So it's really matching the products that are available to the consumer, anticipating what their needs are and communicating that back to them at the right point in time. So I really like Jeff's point about, scalping tickets. It's exactly, that's a great analogy. It's exactly that. You can increase your opportunity to sell things if you're at the right place and with the right product at the right time. And all of this big data stuff is really about identifying those points in time when you can have the right product. It's not luck, it's really understanding. And it just, slightly different thing I do want to throw out is that the regulatory environment right now has provided barriers of entry for other people to come in and sell insurance. And the industry has relied on being able to keep some of those barriers up. I think it's actually reached a point where it's a disservice now, and it's impeding the ability for brokers to compete. And I think that the auto app and the property app are great examples of an outmoded way to underwrite and identify risk. It can be done far more efficiently and effectively and far faster. And in this day and age where we have 2-minute attention spans or less, you really want to complete that transaction as quickly as possible.
If I could just turn to you, Bill, for a second. The question that always comes up, who owns this data? And I get a sense that maybe there's a different answer now than there was, say, a few years ago. And maybe you could comment on that?
Yeah, I mean, it's fluid for sure, and there's so much to be talked about here, but I think the one point I'll make with this group is I see a huge opportunity for you folks, even as it's unfolding in terms of the data that's out there. There's the hard data from Internet of Things, there's the behavioral data that Greg just talked about, and then there's the question of, who does what with it. One thing that's pretty clear is Canadians in particular are concerned about privacy of data. But there's a whole bunch of issues. I mean, in some cases, they're not even thinking about the data that's available for them that's out there. So that's sort of problem number one. And number two is, the data can be used for good and it can be used for evil. And so as one of the true sort of independent intermediaries out there, one of the areas I think you really can start to stress and leverage, frankly, is, look, this is a great unknown. All we know is that there's more and more data that's out there. There's stuff going on, there's things that people know about you, they don't even know they know about you. One thing you can count on is with us, we'll have your back. So you think of client privilege with doctors and lawyers, you guys are professionals. I'd be playing that card left, right, and center in terms of saying, as we move forward, the person you want that is mitigating that data with you is us. Because if it becomes clear that some of that information shouldn't be going to certain places or it's going to be held against you, we can A, make you aware of it, and B, maybe talk about behavior change. There's maybe some things you need to do. So suffice to say, there's a ton of opportunity coming with this data explosion. And if I were you guys, I'd be doing everything I can to position yourselves as being the folks that can most help your customers navigate what's still very much a great unknown, but there's some minefields out there to be sure.
Thank you very much. Now, we have 5 minutes. I'd like to turn this over to you, but I'm going to make a suggestion. There is a group of independent agents in the U.S. who have gotten together recently. Their penetration, incidentally, of the market is about 35%. All things being equal, they write about 35% of the business through independent agents in the U.S. They want to return to 40, 45, or 50% of market share, and they're looking at methods to do that. I'm happy to have you ask questions, but can you think about, is that something that you could make a commitment to do? And if so, what is the type of commitment, and what support do you need to get there?
I'll take a stab at it.
Go for it.
Collaboration
is the word that I see. We've got a bunch of different plays that the insurance broker distribution channel is using. We've got next door, Mr. Natur of Bullfrog, that's got the commercial digital play. We've got Mr. Mitchell, Mr. Adam, with his play on the technology piece for the personal auto product and the digitization of that space. And we've got like our broker vendors on our software that are doing their thing to keep us competitive and relevant in the marketplace. And the way that I'm thinking is, you know, aligning our brokerage with some of these other brokerages that will escalate my competitiveness in the marketplace as we transition into the digital age. We go in business, we go to work every day at our brokerage as if we're out of business. That's how we approach the new reality.
As if we're what?
Out of business.
I see.
We go in with that mentality because the reality is over 45% of our revenue is generated from the auto product. And we see that product as no longer viable for our distribution model. So we would all want to be part of the problem 10 years from now by repositioning our brokerage now so that we can be relevant 10 years from now. So collaboration of the technologies that we're currently using as independents in order for us to remain competitive as a channel.
Anybody want to take a stab at a response there? Simon?
Yeah, I'll share with the group here the pilot that we're doing and piggyback on what Greg said about data. I think you're sitting on the mine of gold. But carriers like us do have the other piece of the puzzle. So what we're doing right now is we've decided we are running in 3 provinces right now, a pilot where we ask the broker to share some data with us. And we are combining our data together to provide, you know, what is the next best product, what is the unfulfilled market. So really trying to bring some marketing intelligence out of the data. I mean, just 2 years from now, 2 years ago, we didn't have that view. For us at Aviva, the data we had, we were looking at policy. We're not looking at clients. I think, you know, if we, to piggyback what you said, if we work together and collaborate, that will be a good example. We have one piece of the equation, you have the other. If we work together, I think we can be successful in that shift that is needed in our market.
Can I just add one other piece, and forgive me because I do this usually anytime I have a captive audience, but when you mentioned the word collaboration, I think right away of the Beyond Best in Class program that we've helped put together with the IBAO. Adam Mitchell, Jeff Roy, Allen Insurance is here, Jocelyn Insurance is here. They're all graduates of the BBIC program. Talk to them for sure, but collaboration is front and center. Every single one of those folks, I think, would tell you that they went in thinking, okay, you know, we need to change, maybe we'll get some ideas. And I think they came out understanding just how much they needed to transform, but feeling much better about the fact that there's huge power in collaboration. No one of us is smarter than all of us. And I can guarantee as a result of each of the sessions, the cohorts have stayed together, they become comfortable, you spend 5 days together, you get to know people for better or worse. And it's made a difference. So when you start looking around and see some of the leadership brokers somewhere in this room, lot of it started with them realizing that there's nothing holding them back except themselves. So if you haven't looked at the BBIC program, come talk to me, talk to the IBO, talk to one of those guys. If you want to get collaboration kick-started, and oh, by the way, Aviva has been supporting this program from the get-go, as has Intact, so they will help. You got to spend some money and some time, but you won't regret it, so just thought I would throw that in.
Okay, I know there's a couple of people who kind of waved. We are right at the end of it. If I was in the back of the room, I'd be walking up to tell me to shut up. So I want to be respectful of the time. I'd like to thank very much Jeff, Greg, Simon, and Bill for a very important conversation that we had. I'd like to thank you for your attention.